This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more. Welcome back to 30 Deals in 30 Days. It is day 19, and today we're going to be diving into Nashville, where I am from. Y'all have requested that I find something in Nashville, a city that is relatively popular. One, because I know this market super well, but two, because it's a more expensive, higher in demand market. So how do you make deals like that work, or projects like that work? If you are just now tuning in, this is day 19 of a 30-day challenge where I'm going live every single day, 30 days in a row, underwriting commercial real estate investments so that you can learn how to do it too, so that you see it's actually not that difficult. Now, we're not doing full underwriting. That's a process that is ongoing throughout the entirety of your investment, right? But we're getting ourselves to 90% certainty with the information that we have. And you can get these tools, you can get my course, you can get access to my AI, and even submit deals for this challenge that I will underwrite live on YouTube with you guys if you join the challenge. So go to crecentral.com/30deals30days. That link is also in the description below. Let's go ahead and dive on into this week's deal. So we're going to go to Nashville. I'm not going to even go by property type yet. We'll underwrite anything that I think makes sense. Let's see what is going on here. So right off the bat, I'm probably going to remove this boundary. I don't think it necessarily matters. Middle Tennessee, regional. I'll invest pretty much anywhere within 2 hours of where I am. So just so y'all know how big of a reach that really is, Chattanooga, which is down here, is about 2 hours away. So in 2 hours, I can get to Chattanooga, I can get to Huntsville, I could get to Jackson, although I don't know that there's necessarily anything in Jackson for me. I could even, wow, that zoomed out pretty far. I don't know why it's doing that. I'm not even pressing the zoom. All the way up to almost Louisville. Louisville's about, closer to 2.5 hours away. All right. So we'll look closer to Nashville though. Let's see. UA is saying, let's go. First time joining live and excited to learn. UA, appreciate you being here. Thanks for joining us. Y'all feel free to jump in and ask any questions that you have as we are going through this process. Z is saying, let's go, day 19. I hope everything is working great. Yeah, hopefully we don't have the screen freezing anymore. I updated my computer, and typically that fixes all problems. So if it does freeze, please let me know. Looks like it's still working right now. All right, let's see. Ironwood is saying, after 18 days, I'm now underwriting in my dreams. Thanks, bro. It's like learning a language, man. Once you start, having your dreams in Spanish, that's when you know you're fluent. Ironwood, you're getting close to being fluent in underwriting. I love it. That's funny. Dude, I am probably also underwriting in my dreams as well after how much we have done in the last just 18 days so far. Okay, so if I was actually looking for an investment in this area, I would come over here to the filters. And I'm going to say, I don't want to call for offers. I don't want highest and best. I don't want auction. I just want something that is on market. We're utilizing CRE here. You could also use LoopNet. I much prefer CRE. Square footage doesn't matter to me. Price per square foot, I'm actually going to limit this to $100 a foot. I know that pretty much anything that we're going to look at is going to be more expensive to build than $100 a foot, right? Flex space, brand new flex space, probably $120 to $130 a foot. Office space, $150 to $200 a foot. Retail, $150 to $250 a foot. Hotel, could go, any of these could go way higher than that. The only thing that you could really build for under $100 a foot is going to be self-storage, maybe like bare bones flex space. So the reason that I do that is I know if I can buy it below replacement cost, which is how much it would cost for me to buy more land and build something brand new, then renovate it and still bring it to market for cheaper than what it would cost for me to build, That's an investment that I like because one, we're moving faster, right? I could do that in 6 to 12 months as opposed to probably 18 to 24 for new construction development. And I can be competitive on my rates, right? If they build at $120 a foot and I'm all in at 100, including my renovations, and we're both going for 10% cap rates, I can lease mine at $10 a foot net. They have to go to $12 a foot net, right? Now you start to argue, okay, well, yeah, is it 20%? Is 20% more in rent worth having a brand new building? Maybe. It depends on the level of renovation that we're able to do. Sometimes tenants, though, would much prefer to have cheaper rent depending on the type of tenant it is. All right, let's go for vacant. I actually don't want any tenants in any of my buildings, typically. Now, it's nice to have, it depends on the type of investment that we're doing. I like vacant, though, because I can get a lot of value add opportunity there. I can come in, I can fully handle it. All right, that means that I can deal with putting all the tenants in, et cetera, and it looks like we have 0 listings available under $100 a foot in Nashville. That's crazy because this is all types, any price, any cap rate. Let's see how far we'd have to go. Wow. We got one down in Woodbury, Tennessee, which is pretty far out. Glasgow Road up in Scottsville, Kentucky. All right, let's go back to our filters. Let's see. Maybe we remove the vacant. Now we've got 13 listings. Okay, well, let's see what we've got. Okay. Let's see. $2.6 million for a 2.5 acre CDOI industrial development site. Nope, we're not doing development. $60,000 business only for sale. I think that broker must be confused about what this is. $6.1 million for an 87,000 square foot warehouse. Let's see what that price per foot is. 6,120,000 divided by 87,000 square feet puts us at $70 a foot. That's a pretty good price. 6.1 million seems high, but it's 87,000 square feet. This is up in Gallatin. That is a growing suburb of Nashville. So that may be worth looking at. We'll put a pin in that one. $8.5 million for Beckwith Business Park. Don't want any development. Don't care for ground up. Short-term rental property. Interesting. $8.8 million. I wonder if this is just a condo or if it's the whole building. The way the sun's shining out there makes it seem like it's maybe a condo. I don't know. Maybe we'll come back to that one too. Let me just go ahead and open this one up. And then I'll open up this industrial one as well so that we have those tabbed over. Oh, let's see here. 44,000 square feet of industrial. I love this first image right here. I mean, that is incredible. Really, really showing off the potential of this building right here. Brian is saying, can we give you an address to review even if it's a car wash? Yes, Brian, you can. Submit that in the 30 Deals, 30 Days chat in the challenge. And I would be happy to get to it. We've done a couple of we haven't actually done a car wash for this challenge. We've done a couple. Okay, I think this broker's confused about what he's got. This looks like a ditch that he has taken multiple pictures of. It's probably just land. He's saying, wow, 2 deals underwriting, 1 live stream. No. Let me be clear. We're going to pick one. I'm going to look at both of them, though, and I'm going to show you guys which one I choose and why. All right, $2.5 million for 2804 Azalea Place. I know for a fact that this is not under $100 a foot. This is in Berry Hill. That's a smaller building. That's not going to work. I must not have put the square footage. Okay. So it looks like it came down to basically 2 opportunities. So let's see. I have a feeling we're going to eliminate this one first. So let's see. 11,000 square feet, 5 units. Renovated in 2010. Oh, let's see. A fully renovated turnkey short-term rental asset, which, by the way, is not doing so hot right now. Heart of downtown Nashville, positioned one of the most dynamic and high-demand submarkets in the Southeast. Blah, blah, blah. 11,740 square feet across 4 levels, includes 5 fully furnished and operational short-term rental units. Building underwent comprehensive renovation in 2010. Rare opportunity to acquire a cash-flowing asset. I 100% guarantee that unless you pay for this in cash, it is probably not cash flowing. And the thing that I'm going to be interested to see is how much is it actually throwing off? Because, like, here's the thing. I would not buy an Airbnb at anything less than a 10% cap rate. Maybe a 9% if it's like in the middle of Broadway, because it is still a ton of work, right? Some people will say, oh, well, it's throwing off a bunch of cash. It's worth a 5, 6, 7% return. It is if you work it, right? I can get a 5, 6, 7% cash on cash return, or cap rate by buying a stabilized shopping center. That's like super low intensive on the management. So why would I go and pay for something where we have to we're turning over units daily? I have to deal with my cleaning crews, and I have to deal with, wear and tear on the property because there's so many tenants moving in and out. And plus, they're drinking a ton, they're partying. There's all sorts of liability. It's just a nightmare. So if it's anything less than a 10% cap rate, hard pass for me. Let's see what we've got in the OM. 17 days on market. It's a beautiful building. Like, that looks really, really good. Brian is saying, new here. Don't know if there's a specific chat to send this to, but here's the address. Yes, Brian, you would send it in the 30 Deals 30 Days chat. The link to join the challenge is in the description. It's CREcentral.com/30 Deals 30 Days. I'll show you. I don't even have the community pulled up right now. If we go to community.CREcentral.com, you'll see, this is the Brokers Mastermind. You'll have this 30 Deals 30 Days challenge. You can go here to the chat, and then you can drop it right here. And so this is where I'm answering. You see I'm replying. I'm answering everybody's questions that they have on deals that they're working on. Any deals that people are submitting are all going through this chat box here. Let's see. James is saying a common theme I'm seeing in your searches pretty much anywhere, USA, is poor photos or underrepresented properties. Why do you think that is? I think it's because most commercial real estate brokers are incredibly lazy. I think it's, I just think that's what it is. I think they're actually, most commercial real estate brokers are bad at their jobs. Really bad. This is actually pretty good. Like, these are good photos. This seems like a pretty good looking offer memorandum. I mean, we shall see. Full financials and operating data available upon request. So if they're not even telling us a cap rate, which to me is a problem. Yep. There's nothing there. Not an investment. They're probably not putting anything in there because they know that it's not going to make financial sense. I wonder, what's that Air DNA? I wonder if I could pull up that property on Air DNA and see what it's doing. If you guys are interested in Airbnbs, then Air DNA is the go-to for pretty much all Airbnb data. Well, it's not going to let me. 214. What do we say it was? 3rd Avenue North. Let's see if we can get this to work. It might not. Okay, so if we look at, what did they say it was? They don't say how many bedrooms, do they? Mix of 1 and 2 bedroom lofts. And there's only, 5 units? Okay, 2 furnished 2 bedrooms, 2 furnished 1 bedrooms, and 1 furnished 4 bedroom. So that's 4 beds, 6 beds, so 10 beds total. So let's just go over here and change this to 10 beds. I would assume it's probably going to be at least 6 plus baths, and it will accommodate, 20 plus guests. Let's see what it'll do there. So $338,000 in projected revenue. That's horrific. It's decent, right? It's not bad. And it could be doing way more than that. But remember, if we're going to pay $8.85 million or whatever it was, and I need to get a 10% cap rate on this, it has to net $885,000 a year. It's not even remotely coming close to that. Now, again, this is a rough calculator. They're saying your projected operating income is probably around $220,000 after they take out operating expenses. Now, this isn't going to be 100% accurate because we haven't put in exactly how many beds or whatever it is. But we're saying basically the maximum. This thing will accommodate the maximum that it should. And it's given us a medium confidence score, right? Not looking so great. If we're netting $219,000 on an $8.8 million purchase, that is a 2.5% cap rate. And I don't know about you guys, but I am not getting out of bed to do that much work. Ironwood is saying, James, the bar is low. Brokers are notoriously bad with marketing / making any effort whatsoever. I'm a commercial real estate broker. Yeah, Ironwood knows it, man. It is embarrassing sometimes how horrific commercial real estate brokers are. If you want to be a great commercial real estate broker, just be the person that answers the phone and actually puts together quality marketing. Almost all that it takes. I kid you not. Most commercial real estate brokers are horrific at those. So here's the thing. I just cannot see this making $880,000 a year. It's nice. Don't get me wrong. But we're not here to just buy nice things. It's in a good area, sure. But you've got a ton of competition down there from really nice hotels. The thing that I don't like about this property is that it's 1 and 2 bedrooms, right? You've got 1 4-bedroom. The 4 bedrooms are what do incredibly well in Nashville. 1 and 2 bedrooms, what's the point? You're competing with hotels. And at that point, is somebody really going to want to come rent a 1-bedroom in downtown Nashville? Are they going to Broadway by themselves? No. Typically, you're coming here with friends, right? So I don't see it. To me, it's severely overpriced. So we'll pass on that one. All right. That means that we are going to be underwriting 535 Blythe Avenue up in Gallatin. So this warehouse is 87,000 square feet, sits on 4.5 acres. So you typically can get about 30% coverage on a property, sometimes 40%. It depends on where you are, what your stormwater requirements are, your parking requirements, the type of businesses that you're catering to. But let's do this. 43,560 square feet. That's how many square feet are in 1 acre times 4.48 acres. Gives us 195,000 square feet times 0.3. Gives us about 58,000 square feet. So they have pretty high coverage on this lot already. I doubt that we'd really be able to add much more, but we shall see. Let's pull this up so we can all see these better. 27,000 square foot building. So it looks like there might be multiple buildings. There's a 33,000 square foot section. Okay. Definitely an older property, not in terrible shape though. Okay. All right, let's look at the flyer. It's been on market for 178 days. Not surprising. I mean, a building this big, they take a little time to sell. Some clear span, 12 to 20 foot ceiling heights. That's a good range for the ceiling heights. I mean, 12 feet, you're hoping that's in the office area, right? 20 feet, you're hoping that's in the warehouse. 20 feet's decent. Like that's where most, I'd say 18 to 22 feet is generally where most flex users, most, of your historical types of users for industrial space want to be. Now, you'll see a lot of the newer construction today being built that's 28 feet, 32 feet tall. I mean, it gets super, super tall. And that's great because they're able to make the space far more efficient when you get heights like that. The thing is, though, that requires a special tenant. You have to have specialized forklift operators that can actually operate forklifts that will go up that high. The majority of tenants don't and can't do that. So 20 feet, that's decent. So building one is 27,000 square feet, clear span with 20-foot peak, 2 dock doors, 2 drive-ins, 4 offices, 2 restrooms, mezzanine with storage cage, ceiling heaters. Man, that's what you need. That's all you need. Building 2, this gets a little rough. 57,000 square feet, some clear span with 14-foot ceilings. That's pretty low. 33,000 feet with columns, 25-foot span. That's not bad. 3 offices, 1 restroom, 4 dock doors, 4 drive-in doors, ceiling heaters. Okay. So I'm assuming this is the one. This is the one that's got the posts. So you can see here, like clear span just means that there's no support beams in the middle, right? So you see all these support beams everywhere. That's not necessarily the worst thing in the world, right? Because you've got 25 feet of space in between all of your columns. However, you think about like, well, what if somebody is manufacturing homes inside this factory, right? It's not gonna be enough space, only 25 feet, right? So that will eliminate some tenants. However, most tenants can typically get by with 25-foot clear span or 25-foot span between support beams. Looks like that's part of the clear span right there. See how it just spans all the way across. You have just open area. All right, man, we don't have a whole lot of information on this one. Let's see. Pricing from $650 to $950 a foot. So it looks like they were working on getting it leased before they listed it for sale. Okay, or they're doing both, for lease or for sale. All right, let's look this property up. So you can see here's kind of Gallatin relative to Nashville. Right. I mean, it's probably 40 minutes, give or take. There's my little office in East Nashville. We've done plenty of work up here. I like Gallatin. The thing I don't like about it though is the access. It can be pretty tough. And after Gallatin, there's nothing else. Right. So I mean, if you look at this from a map, from like further up, at least like Hendersonville has Gallatin on the other side of it, right? And then there's Goodlettsville. After Gallatin, you don't really have anything. Like it kind of just falls off. You got a bunch of smaller towns for sure. That's really kind of it. So here's kind of your downtown area, right? You can see where Main Street kind of intersects with Gallatin Pike. So there is a pretty decent amount of traffic that goes through in this area, and this really isn't far from it. So pretty decent location. Now this is a small town, but a pretty decent location. So I can't tell if it's both of these. I mean, it doesn't show that on the flyer. Like this one is specifically highlighted, but I don't know. Maybe let's just measure it and see. Measure. If you didn't know that you could do this, now you do. All right, it's not going to be 100% accurate, but let's see here. Total area is 28,000 square feet, so it has to include this big building right here too. Okay. Let's get on the ground. I don't think it includes that. We're not going to be able to see a whole lot. I mean, it looks like your typical warehouse that was built 30, 40, 50 years ago. I mean, it's probably closer to 30 than 50. Yeah, just not a lot to see there. I mean, this looks, yeah, that doesn't seem to be a part of it. It says 535 or 537, and this is 535. This aerial doesn't do us any favors. We don't really have any other pictures of the exterior. Yeah, see, I think that is the building that we were just looking at, because that's the road. So they're not connected. So it's this and this. I wonder if I can log into my Landglide account. If you guys don't have Landglide, it is the #1 piece of software that I highly recommend to everybody. Oh my gosh. I don't even know what my account's under. This will always show us the parcel lines. Once you get outside of Davidson County, you know, some of these GIS maps get really, really difficult for you to actually view. And so I highly recommend, yeah, it looks like it's just under my email. I highly recommend getting a Landglide account. I think it's like $7 or $10 a month. But it's phenomenal. I mean, this is what I use to pull up everybody's. You'll see here in a second. This is how we pull up everybody's information. 535 Blythe. Okay, well, 709 Blythe, 0 Blythe, 745. So we got to go further south. 0, 0, 0, 6. Okay. Well, it got us close. 551, 549, 537. Okay, so it has to be this lot. But it's saying that this is 0 as if there's nothing built on it, but we know that's the living abundantly. I wonder, let me change the layers on here. Let's go to satellite. Yeah, I don't know why it's saying 0, but that's definitely the property. So they bought it for $1.3 million in 2007. Whew. Good for them. That's pretty cheap. Can you imagine? Let's see what else we've got here. Deeded acres 4.48, land use, warehouse, land cover. It is high density. I mean, if you look at this, like those warehouses are taking up a pretty significant chunk of this property. Let's see what other information we can get out of here. See, this is great. I'm not even sponsored by Landglide. I just love them. Look at that. 1987. What did I say? It was closer to 30 years than 50 years. So it was built in 1987. That's good. We don't have to worry about asbestos. We don't have to worry. We probably don't have to worry about cast iron plumbing. This is saying the sum gross area is 57,000 square feet. So there's probably some building on here that they don't necessarily know about. Because if they're saying it's 87, it's probably it's probably this back building plus, this one was like 27,000 or something like that. So that would make sense. All right, that's really it. And you guys are being quiet today. We were all talking at first. This is good information now. I mean, we haven't dived into something like this yet so far, so I'm glad we get to do this. Okay. I like this. It's a decent amount of land. You're in a pretty good area. The biggest thing is we have to make sure that this is going to make financial sense as we go to underwrite it. Let's see. Remember, they were trying to lease it for $6.50, upwards of $9. Let's see what's available for lease. In that, 27,000. We'll go to 20,000 all the way up to probably 100,000 square feet because you'll find some good comps in that area. We're going to go industrial only. Size minimum 20,000 square feet all the way up to, let's just do 120,000. It'll probably be relatively comparable. Looks like we do have a couple of properties specifically. And let's change this. I mean, I had in there our minimum square footage is 20,000, but it feels like let's see what's specifically available in Gallatin. There's a 24,000 square foot warehouse available. Oh, that's this building. Oh, they've dropped it to $5 a foot. That's not good. That means that they've really been trying to get this leased and they can't get it figured out. Separate TX is saying how much can be made in this business during beginner's years. Oh man, that's an impossible question to answer. I mean, I know people that made, we had one member of our mastermind that made $1 million on his first deal. And then we've got other members that, their first deal, they're making $3,000 a month in passive income. So yeah, it completely depends. It completely depends on what kind of deal you go do, what your access to capital is, how much work you're willing to put into it. So, I mean, it could be tens, if not hundreds of thousands of dollars. You can also just lose a bunch of money if you do it wrong. So that's a really tough question to answer. Z is saying, can you make a video on the best tools to use as a real estate investors that would be helpful? Yeah, I mean, honestly, Z, I don't use, other than what you guys have seen, now that I've brought in Landglide, it's this and white pages. That's it. If I wanted to look up who the owner is and call them directly, it's white pages. Okay, so the fact that they have dropped this down to $5 a foot really kind of scares me. But then here's another one that's listed at $13.95. This one looks substantially nicer. It's got brick around. It's got a brick skirt. It's about 25,000 feet, 18 to 24 foot clear height. So similar. Oh, come on. What are we blowing it out white so it looks a lot nicer than it is? That's funny. I mean, it's in better condition, so of course we're going to get a higher price per square foot. I mean, keep in mind, that's just what they're asking. I don't know why these other guys would be having a problem getting at least for $5 a foot, though. I mean, that's kind of wild. I mean, you could argue that the other one is in a better location too. See, this one that we're looking at that's more expensive is on the other side of town. This one's really close to downtown. All right, let's see. Is there anything else available? Okay, I would take out Rivergate Business Center. I don't know why that one's showing up because it doesn't have any spaces that check that box. This one's 11,000 feet. Nope, scratch. 12,500, 11,000, 13,000. This is weird that it's not giving me the square footages that I need. 7,500. $20 a square foot. What in the hell? It's the same building. This is, we're going into this purely out of my curiosity because I'm looking at this going, I don't see how the hell that is worth $20 a foot at all. I mean, Compass is a residential brokerage. So you just never know. I mean, that's not a $20 a foot property. All right. I mean, here's the thing. $5 a foot is cheap. Like, to me, I just feel like there's no way that it's been, knowing the Nashville market, $5 a foot, and it's still not leasing, to me, either says there's some sort of infrastructure that's missing on this property or it's being marketed very poorly. I can go ahead and tell you I think it's being marketed poorly because these pictures aren't great. There's not a lot of, I mean, you've got one exterior photo and then you've got this aerial that was taken off of Google Earth. That's it. I mean, this, like, tenants need this kind of space. The fact that there's nothing else available for lease in Gallatin tells me that there's a lot of demand in that area for this type of property, right? Because I know Gallatin well enough to know that, like, there's a decent amount of industrial up there. And so for it to be completely vacant says enough. Let's see. James is saying Land Glide looks pretty sweet, especially compared to most county assessor sites that are stuck in Windows 98. Dude, you're telling me most assessor sites are horrific and don't even work. The cool thing about Land Glide is too, like if I let's just click on this random property. Well, maybe not because it's a trailer park. So here's the property we were just looking at, I think. No, it's not. I don't know. Let's just pick this random piece of dirt. I can then click on the county, and it'll pull up the county GIS maps. So, like, if I really, really wanted it, then, you know, we could go into and start looking at that too. That way you don't have to look up the county GIS maps. So, yeah, I mean, it's pretty great. Okay, let's start underwriting this one. We've got total square footage, 87,000 square feet. I have a hard time seeing that we're going to find one tenant to take both of these buildings because they're pretty different. So what I'm going to say is within the first 12 months, we'll get one space leased up. And then in the second 12 months, we'll get the next one leased up. I don't know why it's been sitting vacant for so long. I have a feeling that if you brought in the right brokerage team, they could knock it out. But I'm making assumptions on that because there's stuff that I just don't know about this property. I mean, the ceilings look fine. I don't see any wet spots or anything going on. You know, it doesn't look like the roofs are leaking. I mean, it's not nice, but it's not in poor condition, right? And I say it's not nice in the sense of, like, it's clearly not brand new. Yeah, I mean, that's fine. These people don't care. So, all right, we're going for $6,120,000. We're just going to underwrite it at their asking price. I'm going to do zero capitalized rehab for now. We're going to come back to that. Closing costs need to be 2%. So let's say 180,000. Is that right? Yeah, it's too high. 12,000. Sorry, 120,000. And that could be high, right? But we're going to have to do some, you know, environmental work. There's some stuff we don't know. All right. I'm going to stay. I feel safe with a 25% down payment, 7% interest, 20-year amortization. I'm going to put this in at $6.50 a foot. If we can't get that, the only reason that we wouldn't be able to get that is because there's something wrong with this property that we cannot tell from this underwriting. We will go up at 3% annual increases. And like I said, for the vacancy rate, remember we've got, let's pull this up. We've got one space that I think is 27,000 feet and then one that is 50. 27,000 and 57,000, but they're saying the total is 87,000 square feet. So I don't like that math, man. Let's go back and let's just measure it ourselves. All right, so measure. We want the area. And so at least give us approximate. So it's saying 1.36 acres. Oh, man. Let's go square feet. Oh, how's it doing that? All right, 59,000 square feet. And what do we say this building was? So we'll go with 59,000 for that. That one's 28,000. So 59 and 28. So, I mean, it does seem like 27,000 and 57,000 are probably right. It looks like their total square footage is wrong. So total square footage on this, if we're looking at 27 plus 57, what was that, 94? 84,000. So we're 3,000 square feet short of what they're saying it is. So let's say that we lease 27,000 square feet first out of the 84,000. That's 32%. So for this first year, we're going to be 100% vacant, right? Because it's going to take us 12 months to find a tenant. Then we're going to drop down to 68%. And then in another 12 months, we'll find another tenant. I'm just being conservative here. Surely we could get it done faster than that. But we shall see. Kevin is saying, Tyler, are you open to underwriting a deal from here in Barbados? The deal won't be on Crexy, but our website for listings would have the information, and I can provide a document with local context. Kevin, I could take a look at it. It'd be really, really tough if it's not going to be on online anywhere, so that we can do all of the information that we've done here. But yeah, I mean, drop it in the chat, man. I'm happy to take a look at it. Let's see. Ironwood's saying that building on the bottom right is new. It's not showing in other photos, but probably included. Talking about this one right here. I mean, that to me, it's so small, Josh, that it looks like it could be some sort of shed. And it's 3,000 feet. Well, I guess that could get us to what they're saying it is at 87,000 feet. But, I mean, nobody's going to rent that. It's just not. I mean, the fact that they wouldn't show that in the photos is pretty telling to me. But, all right, we'll go with 87,000 feet. We'll assume that there's a little 3,000 square foot building. Let's assume that we get that lease too in the first year. So then that puts us 30,000 square feet out of 87,000 square feet. So 34.5%. Minus 1. So 65.5%. All right. So we've just increased our occupancy. All right, we'll do that. Now, operating expenses, we're going to be bearing the full brunt the first year. I'm going to assume they've got to be hopefully a lot cheaper. They don't tell us what they are. I wonder if we look at this one, which is down the street, if they say it's triple net. Okay, here we go. Look at that estimated operating expenses. 48 cents for insurance, 74 cents for taxes. Common area maintenance really isn't going to be a thing because you're going to pass that on to the tenants anyway. So, I mean, we're talking about $1, let's say $1.20 in expenses. That's a comparable building. So we'll use that number. All right, so $1.20. Now, we're going to pay the full amount the first year, right? Because we're not going to have any tenants. The second year, I notice this is red. If you were here yesterday, we modified this. What we'll do is we're going to have 35% of the expenses passed on to the tenants. So it equals that times 0.655, right? Because we're still paying for 65% of it. And then this third year, we're actually going to drop it down to, I'm going to say 25 cents a foot. And just, ooh, that might be too much. Let's do 10 cents. And just ongoing admin expenses that we're having to spend, all right? I always just like to account for something in these, right? Even though it's fully triple net, you know, we got to have something built in there. So we're paying about $60,000 in commissions. All right, let's see. We get to a 1.29 debt service coverage ratio. Once we've got this leased up, it should make sense. I like that. Okay, coming down here, let's say that we are going to syndicate this. 30% asset management fee. I wish. 2% asset management fee. We're not going to need a lot of reserves. So what we'll do is we'll drop this down to 10 cents. I think that's plenty for a building like this. $0.10 a square foot. You know what we should do? We should negotiate with the bank to give us 12 months of interest only, right? So our interest is $321,000 a year. Since we have no tenants in place, this is going to take some work. We got to get it leased up. Let's negotiate for some interest only, all right? That'll save us a little bit of money in that first year. At least keep the burden a little bit lower. Expenses are $104,000. We have zero coming in. Mortgage interest is $320,000. Total non-op expenses $330,000. So we lose $330,000. Should actually be more than that. F63 minus F78. F52 times F10. F52 times F10, that's the square footage, so 87, whatever the expenses are, plus F54 times 1 minus V56. Okay, so it's saying that this is basically making it zero. And it shouldn't be. So since this is 100% vacant the first year, I'm going to have to hard code these expenses and just say this equals that. All right, and let's make that red so that we know We change that. Now, what it's doing right there is it's basically saying, hey, based on the amount of vacancy, it should actually calculate it the opposite way. But whenever you have 50% occupancy, it's going to say, okay, well, then you only need to be paying for 50% of the expenses. There's probably a better formula for me to do that. I might need to look at that and send you guys a new spreadsheet so that you wouldn't have to hard code it like that. So you're going to lose $434,000 your first year. That's a lot of money. That's a lot of money you're going to have to bring to the table. But look at that. You start to cash flow a little bit once it's fully up and running. I think that we could probably flip this once it's up for maybe a 7% cap rate. I think it's actually pretty decent. And then it ends up being a 61% return on your cash. So that's actually not bad. That's actually not bad. Let's look at this and say, okay, actually, we're going to bring $10 a square foot to the table. So we're going to bring $870,000 to fix this property up. And I think that because of that, we're able to get $9 a foot, which is what they were originally trying to get. All right. We'll still keep our timeline for how long it takes us to get this going. And look at that. It actually starts to cash flow 10%. Oh, 164% return over 5 years, which is a 33% annualized return. That's outstanding. Outstanding if you can get that $9 a foot. Let's say that we put $870,000 into it and we're only able to get $8 a foot. Now, keep in mind, I'm not bringing any tenant improvement allowance to the table. We're going to go ahead and just spruce this place up, make it look nice. We're going to paint it. We're going to refinish the floors. We're going to make it look really nice. We get to a 7 to almost 9% cash on cash return for our investors. And that's when we double our money. So basically the minimum that we could get is $8 a foot, triple net over a 2-year lease up period. In that case, this deal makes a lot of sense. But let's say, you know what? $870,000 is kind of absurd for the amount of what needs to be done. Let's keep that though and say, you know what, owner, I'm going to have to bring $870,000 to fix this up. I am only going to give you $5.5 million. $550,000, that would be great. $5.5 million for him. So see, this operating capital is based off of how much money you're going to lose that first year. So it's saying you need to bring $2.2 million to the table. All right. If we are able to get that $8 a foot triple net, look at that. Cash flowing again, 9 to 10, 11.5%. And we more than double our money. We 2.5x, maybe, our money. So that's really, really good. 29% annualized cash on cash returns. Let's say that by the time that we deliver, we're actually not able to get a 7% cap rate. It's probably closer to a 7.5. So at that point, we're still doubling our money at 117%. All right. So not too bad. Not too bad. So Josh is saying, no, the building outside the lines. So Josh, if it's outside the lines, like this one here, then it's not included in this sale, right? So this is a different parcel. Looks like that's owned by the railroad. So only the buildings that are within these lines here are the buildings that would be available for sale here. Unless, the railroad decided to sell some, which based on them having a track right there, I doubt it. But that wouldn't be too bad. I would love to buy some land from the railroad. They own a bunch of stuff, man. You start looking into all that. It's kind of crazy. So I think it could be actually a pretty decent deal. I think, if I was actually serious about digging into and doing this deal, the next thing that I would do is go through, I'd get out there and tour it. I'd call this broker up. I'd get out there and tour it, get my hands on it, see what's going on, ask them the questions. Why hasn't it leased yet? Why do you think you had to drop it to $5 a foot? Actually, let's say we're only able to get $5 a foot. Let's see, and I don't want to bring any money to the table. Like if I'm only able to get $5 a foot, I'm not bringing any money to the table. We'll keep our $5.5 million here. Let's see how this stress test works out. Ooh, I don't like our cash on cash returns. My debt service coverage ratio never works, and we lose money on the deal. So, I mean, that's one piece of leverage you could actually use against the owner. Well, you're having a hard time getting $5 a foot. If I get $5 a foot on this and I pay, $5.5 million, it doesn't work. What if we pay $4.5 million and we're only able to get $5 a foot? Still not worth it. Like a 45% return over 5 years. That's 9% cash on cash annualized. You could get that in stocks and bonds and have far less headache. So I wouldn't do it. You do hit your debt service coverage ratio, which is nice, but not worth it. So that would be a point of leverage that I would actually use against a seller. Like, look, you guys have it listed for lease at $5 a foot. You haven't been able to get that. If I pay your price and I go for that, I'm going to lose money on this over 5 years. So help me figure this out. Help me reconcile this, right? Sometimes the seller might be willing to say, you know what? Yeah, you're right. I wouldn't pay that either. Yeah, exactly. Aaron would say in triple net comp nearby is $12 a foot. Yeah. I mean, there's one for lease at like over $13 a foot. So, I think that we'd have to put some serious money into this in order to get that. I'm just saying like, hey, let's use that as leverage to pay less. But I mean, look at this. If we get $10 a foot and we get it for 5.5, I think in order for us to get $10 a foot, we're gonna have to put a lot of money into this. So let's say we got to put $1 million into it. Look at that. Then it cash flows like crazy. I mean, that's not bad. I mean, you're like tripling your money, more than tripling your money over 5 years. 47% annualized cash on cash return. So there, like at that point, yeah, I mean, if we feel very confident being able to get $10 to $12 a foot triple net, then there's no reason not to do this deal and to put $1 million into this property to make it look better. I mean, if I had $1 million to put it into this property, let me show you what I would do. This looks like most of it's gravel. I mean, you can kind of tell by just see all the tire marks. Like, it'd be tough to tell if this is clearly concrete. I think that this is gravel. Looks like part of it is asphalt. I would be ripping all this, or maybe not even ripping this asphalt up, but putting a new layer down, sealing and striping it, making that substantially nicer. I think one of the problems that this property has, we didn't even look at that, is the access. Look at that. This building up front basically blocks the entirety of your access back here. So, I mean, one of the scenarios that I would probably underwrite is what would it look like if we tore this building down and moved and did it right here? Or maybe you could pick it up and literally move it to this spot right here. Because you've got to have better access. I mean, coming down here, if you're a truck, turning right onto Pay Street, then turning right onto Council is a problem. Or maybe buying this. I mean, you'd have to like buy this building. Yeah, you'd want to find some other sort of access. That's probably what's keeping this as a problem. This is interesting. Like, there's a road that comes from the railroad's property to ours. So I wonder if at one point they had leased this to the railroad, and maybe that's what it was. The railroad stopped needing it as much anymore, and so they were fine with the access because they had their own access right here. Because they are on top of each other. Like, if you look at this, like there's even a turnoff from right there. Like, that's a road. It crosses the parcel lines. So that would be the first question I would ask. What's the access? And then probably looking at underwriting what it would look like to move this building over here. And then I think you could definitely get probably $9, $10 a foot. It would make a lot of sense. I would paint the exterior. You might have to replace some roofs, so you'd be spending some money on that. Maybe even do some landscaping. Make it look kind of nice. So there you have it. That's what I would do if I had $1 million. And hopefully that would go a long way. All right, guys, thanks for joining me on day 19 for 30 Deals, 30 Days. If you have deals that you want me to look at, join the challenge. Go to CREcentral.com/30 Deals, 30 Days. As always, that link is in the description below. Just click on it. It is free to sign up. It's free to submit deals. Submit them. Happy to underwrite them for you so that you can start to learn how to actually do this and analyze deals better yourself. Everybody that has submitted a deal that I have underwritten has messaged me in the app and said, thank you for doing this. I understand my market. I understand how to underwrite deals in my area so much better now because of this. So take advantage of that. I'm doing it for free for you guys. I just want you all to know how to do this. I'll see you all tomorrow for day 20. This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more.